not a bad breakfast. So just a quick thank you to everybody who's subscribed to the channel. It's going really, really well, and I'm getting lots of great feedback from you. Thanks very much. And I'm also getting lots of really nice ideas from people who are saying, I've done this, I'll do that, what about this, what about that? So that's very, very interesting and very useful to me too. So thank you for that as well. I just thought I'd pop up and say thank you very much for everybody who's watching, and I'll see you all soon. But let's carry on with the video. So hello everybody, this is my latest rant, and I've been thinking the last couple of days, looking at the price action on gold and silver, that, it's wild. It's totally wild, and that doesn't make me happy, because gold is for war and Bitcoin is for flight, and Bitcoin has also gone on a big run. So the two harbingers of trouble ahead have been rallying extremely. Well, that's not really good news. So I've been looking around for other alternative reasons why gold and silver and platinum and palladium and Bitcoin have been so strong. I mean, really, really strong. And you could come up with other explanations than something really bad is about to happen. And so here goes. Here's a few narratives that might explain it. One, the government shutdown. Now, during events like that, people are worried. The nervousness makes them buy things like Bitcoin, gold, silver, precious metals. They're haven assets, so they would tend to go there. But actually, when you look at the government shutdown in the US, it's really not all it's cracked up to be. I mean, most of the American government is running. It's, if you want to go to Yellowstone, you've got a problem. But it's not as if the army shut down or they're not paying out social security, all that stuff. The second is, again, back to the US government shutdown. I believe that the American Treasury is pumping money into the economy, which it kind of saved up when it realized there was going to be a shutdown, which is, quite common these days. And now it's actually monetizing the short end of the yield curve. So when bonds come due, it's basically just handing out cash, and that cash is going into the market, and that cash that goes into the system goes into equities and other assets that are good for carry trades and other ways to make money from money sloshing about. So that's another reason why assets like gold and silver, platinum, palladium, Bitcoin and equities would be so strong when there's a government shutdown. The Treasury is basically flushing the system with cash. Now, another reason, which is probably even more powerful than those two, is that the retail end of speculation and investment is getting FOMO for gold and silver and anything precious metal and Bitcoin. I mean, you couldn't really get a bigger group of rah pumpers than you get in crypto. So retail is finally, and particularly in precious metals, getting FOMO. And of course, there's quite a lot of equity FOMO, and there's been quite a bit of that going for quite a long time. There's another reason. So you've got Treasury pumping money into the economy because of shutdown, the nervousness from the shutdown, and general precious metal FOMO. The markets in precious metals have been so strong that we're in a phase now where everybody and his neighbor is saying, oh, I need to be in precious metals. Where can I get precious metals? And that is what's driving those prices. But to me, I don't like markets when they go like that, because it normally means they're in a bubble phase, and a bubble phase means you're getting near a top. Now, I think that the first gold top, maybe the only gold top, is around $4,500, and obviously $5,000 an ounce will be a magnet for the price as well. That is where I thought it would go. Initially, I thought it was going to go to $3,500, but as I keep drawing my squiggly lines, I saw $4,500 as a possibility, and here's a chart of that. So let me run you through these charts of all these precious metals and Bitcoin to give you an idea of where I think we are. It's not advice, it's just an opinion, but it's on each of these critical assets where I think we're sitting. So first of all, let's deal with Bitcoin. As I see it, Bitcoin is range bound. It was, a few hours ago, at the top of its range. It's fallen back a couple of $1,000, so it's not at the top of its range anymore, but that range is where it's been sitting for a long, long time now. So if it breaks up through it, it's going to go a long way. If it breaks down through it, it's going to go a long, long way. And if it just sits in that range, it's just going to go tick, 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 tick. So if it breaks up, $150,000 a coin, not a problem. If it breaks down, $60,000, $40,000, that's where it could end up. So it's, champagne or nettles for Bitcoin. Let's have a look at gold. Well, you couldn't really get a stronger chart than this. I mean, look at it. I mean, it's just gone up like a rocket. Now, the trouble is with rockets is they're up like a rocket, down like a rock. Now, the 3,500 level that I saw all that time ago, I've marked it on the chart so you can see what I was thinking. Now, the 4,500, I can't reproduce that chart now. I can't reproduce my thinking. But when I try to, I get the 5,000 level. And, that is obviously a magnet for gold. If it doesn't suddenly stop and go into reverse, that's where it's going. And then at 5,000, the big call will be 10,000, which is a mighty call. And I will be really sweating it when we hit the mid 4,000s, I can tell you, because I always like to leave some money on the table for someone else. Let's look at silver. Now, silver is very interesting because you can see it's completely tracking gold. But it has this tendency, like Ethereum does, or has in the past with Bitcoin, of running past gold when gold is really on the move. It's the fast horse. And as a fast horse, it could go very much further than now. And $100 an ounce is absolutely doable. It's nearly at 50. 50 is toppy. Now, if you weren't a super bull on silver, you would think, $50 an ounce, time to say goodbye. But with the way things are right now, it feels like there's a lot more punch in the precious metals, and therefore they're likely to run and run. Well, it's already at 50 silver. So the next magnet is 100, isn't it? And 100 with gold at, say, 5,000 or even 4,000, 40 to 1 to gold. I mean, that's a classic level. Anyway, we will see. That's my thinking on it. And these are the charts. Now, when it comes to platinum and palladium, platinum and palladium used to be 1 to 1 to gold, sometimes 2 to 1 to gold. And now they're 1/5 to 1 to gold. So they've just got a lot of room to maneuver. And I'm not even bothering putting up the charts because they could easily go 1 to 1 with gold because they only make 200 tons a year. Go figure. And it used to be 1 to 1 with gold. Making 200 tons, not 3,200 tons like gold, not 25,000 tons like silver. You'd have thought any sort of buying pressure would really have the ability to shoot them to the moon. And that's kind of what I'm expecting. So it's really difficult to draw any charts that make sense. But you could look at the palladium chart and say, look, it was at, $2,500, $3,000 an ounce only 3 or 4 years ago. But, let's not dream. Let's think about gold and silver now, and then worry about platinum and palladium later, because they will go in the same direction as gold and silver, and I believe there's still got room for them to go up quite a bit more. So platinum and palladium will follow. When gold and silver starts to peak, that's another matter. We should look at platinum and palladium then to see whether they've got any legs, but that's for a future video. Anyway, thank you very much for watching. Please subscribe and like. See you again soon. Bye now. Hello everyone. Sorry about the absurd hair, but I was in a wild hot spring on a beach in Kos, Greece this morning, boiling away, and this is a result. Sorry about that. Anyway, we need to talk about palladium. Now, when I got into platinum group metals several months ago, I looked at palladium and I went, that is where the returns are going to be made. Because palladium is even lower than platinum. Now, gold, silver, platinum, palladium. If gold breaks out, silver breaks out, platinum breaks out, palladium breaks out. It's a no-brainer if you think gold is going to run or is running to follow on with silver, platinum and palladium. But when I looked at all of the metals, the one with the biggest upside is palladium. Now, palladium is part of the platinum group metals, platinum, palladium. They have the same kind of industrial usages, which is catalysts, fuel cells, that kind of environmental chemistry thing. And platinum and palladium have had a long-term relationship and a long-term relationship with gold. If you look at platinum, you would say, well, platinum historically has been 1-to-1 with gold, sometimes 2-to-1 with gold. And that's the same for palladium. Platinum and palladium tend to be the same price. But if you look back of 2 or 3 years, and you'll see it in a chart coming up, palladium was $3,500 an ounce, while gold was a lot lower. So have a look at this chart of gold and palladium running together. Only a very short period of time ago, or at least in my investment horizon, 3 or 4 years ago, palladium was way more per ounce than gold, and now gold is way more per ounce than palladium. But gold, they make 3,200 tons of that. Palladium, 200. Now, platinum, palladium, gold have the same kind of strategic metal usage. That is a currency for intergovernmental transactions, the sort of thing that during a war, rather than pay in paper, a country will say, pay in precious metal. And that would be gold or platinum or palladium. But gold is obviously the one that people would default to. But palladium and platinum also work just as good because they're very, very dense. And you don't want to be paying in iron because that's a huge boatload for very little value. Whereas something like gold or platinum or palladium, you can get a huge sum in something like a submarine or a ship. That's why historically, when governments are buying things off each other in a war, they put gold on a battleship and send it across. And that went on a lot. And that's really the basis of the value of gold in the idea that gold is for war. Gold is the international currency of countries during heightened stress. Now, platinum and palladium work just as well. However, they don't make much of it. So platinum and palladium, for example, right now are not under sanction by America from Russia, because Russia is a major producer, because there's just simply not enough of it, and America can't afford to put platinum and palladium production under sanction because there wouldn't be enough for America. So that's been put outside of that, and that gives you an idea of what could happen to the price of platinum and palladium going forward. Now, if you look at the precious metals and you think, well, they're all precious metals, gold has a 3,200 ton production every year. Silver, 25,000 tons every year, which is 8-to-1, which, if you think about it, is an indicator that silver could run quite a long way. And it doesn't have to be 8-to-1, but even if it was 40-to-1, it would be a lot higher than it is today. And if gold continues to run a 20-to-1 with gold at, say, 5,000, well, you can do the maths. It's a lot more than silver is now. But if you then look at platinum and palladium and consider them as precious metals in a ratio to gold production, they only make 200 tons. And platinum and palladium have industrial uses that are critical. So as a precious metal, as a metal that retail might start buying, there's just not enough of it. Platinum and palladium, and particularly palladium, can run a very long way indeed. And you're seeing palladium doing it right now. And the reason palladium is running more than platinum is that in the very near past, it has been $3,500 an ounce or more, as you can see from this chart. So it only has to go back to where it was 3 years ago for there to be a really big upside from where it is now, let alone catch up with gold. So with that in mind, palladium right now is the fast horse. It's the one with the zip in it, and you're seeing that in the price of palladium right now. That's the one that I'm watching closely, because that's the one that can do 2x from here quite easily. Whereas gold, $10,000 an ounce, that's a big ask for gold. For palladium to do the same, that's not such a big ask. And for that matter, it isn't for platinum, but palladium's got even more upside than platinum. Potentially, platinum is the next rung down from upside, but to double from here is not such a big task as for gold to double. For platinum to double is less of a big task than for silver. And for palladium to double, it's even less of a big task. And the upside on palladium is the biggest of that whole group. If you haven't checked out newfn.com, link below, you should, because it's very interesting. It's particularly useful and interesting for anybody interested in the London markets, because it's free real time, and we have no plans to charge for it. So you can register with us and you can use free real time UK stock prices on this site for absolutely nothing. And there's a lot more coming soon at a new FN, so check it out and keep your eye on it, because there's going to be lots of terrific functionality and interesting tools coming to that site up to Christmas. Thank you very much for watching. If you haven't subscribed, please subscribe. That will do me a favor. And like and comment and tell your friends. That's the thing that it can really do for me, is tell people you know that might be interested in this material that it's here. So you could go onto Twitter, you could retweet what I forgot to say, etc. So anything you can do there to get my channel out into the world is really appreciated. So any of you that do that, thank you very much indeed. That's great. And there'll be another video coming up soon. Bye now. Well, President Trump's outburst on Friday has set me thinking. Now, I haven't really boiled it all down. I've got a few ideas, but I'm thinking. It's big news, it's a big move. The US-China conflict currently at an industrial and trade level is the big issue that is in front of us. Get it wrong and we'll lose our shirt. Get it right and we'll avoid getting trampled under the feet of these titans as they're battling it out. And it's our responsibility to look after ourselves and our own first, and then worry about all the other stuff later. Oh, they're after me again. Anyway, in a moment you'll get what conclusion I've come up with over the next 24 hours. So I've had a thunk about what happened on Friday. Now, as you saw, the market's tanked. Bitcoin crashed. I mean, I think it went from 125,000 a coin, and at one stage was like 103 or something like that on Binance. So a mighty crash. That's good old-fashioned one-day crash. And it's because Trump has declared a trade war, at least the opening shots of a trade war with China. Now, China has basically squeezed its chokehold on rare earth, and it's reciprocated with Trump's move to put taxes on Chinese ships that arrive at US ports. And that tax is equivalent to millions of dollars per arrival. I mean, up to like 7 million for the biggest container ships. And, you know, that's a big deal. And the reason for doing it is so that American companies will buy American ships, and the world will buy American ships, because coming to America with goods won't have this massive multi-million-dollar tax on arrival. Now, China has said, yeah, we're going to do the same thing too. So any American ship that arrives in China, we're going to have the same tax on it as you're putting on Chinese ships arriving in America. Now, that's called tit for tat. And tit for tat is a game theoretical system which is optimal in a conflict. So if you're in a conflict and a guy punches you on the nose, you punch them on the nose. If they stamp on your foot, you stamp on their foot. If they try to throw you over their shoulder, you try to throw them over your shoulder. Tit for tat. And that is the best way to fight if you don't want to fight. Because the other side sees that anything it does to you, it will do back to you. And that is an optimal strategy if you're in a sort of conflict, and really you prefer not to be. You're not going for it. You just don't want to have that fight, but you're prepared to fight. So you've got China going tit for tat and squeezing on rare earth. Now, if you've noticed in the past, Trump has gone, right, I'm putting a tariff on you. Don't you dare put one back on me, because if you do, I'll put a bigger one on. Well, that's an escalation tactic. And of course, escalation, not a great thing. And if you would play that tactic, if you're in a dominant situation
obviously the other side goes, okay, what you say goes, I can deal with that. And I don't want to get in an escalation because you're bigger than me and you'll win. But China's not doing that, although you could say it's escalating with rare earth, which is interesting right there. If you boil it all down, there is a trade war going on between the two biggest economies, China and America, or you might say America and China. If you examine the two combatants in this, America, China, who is the workshop of the world? Obviously China. In the past, the workshop of the world wins every time, be it Britain, be it America. But America is no longer the workshop of the world. China is. Now, is there anything that's made in America that can continue to be made if China suddenly disappeared? So imagine aliens sweep down, China gone. You can't import products. They're all gone. The supply from China has ended. Actually, there's not much America can make without Chinese inputs. Now turn it around. Is there much in China that can't be made without American inputs? Probably not a lot of things would stop being made in China if America stopped its inputs. So, in a trade war, who's going to win? At that point, you have to stop and just step back a little bit and go, well, how is China behaving? Strategically. How is America behaving? Tactically. And you can see right there's an imbalance. Because all China actually has to do is continue to behave strategically to actually surpass America, which is why there's this, anti-Chinese panic going on in America, because it may already be too late. China may already have surpassed America. And you could say, well, American GDP is so much higher than Chinese. Well, it's double. But actually, when you think about how much GDP is coming from the American government versus the private sector, maybe that gap's not so big. And America has 350 million people, roughly, and China has 1.2 billion people, roughly. That's a lot more. And China is now the workshop of the world, has more cash, as in money, cash money, not American money, but actually the Chinese currency. If you converted it into any other currency, there's twice as much of that currency in circulation than there is the US dollar. So it is now the global reserve currency if China wanted it to be, which it doesn't, because you get the mess that America's in if you go that route. So here we are at the threshold of a big round of trade conflict with China and America, or you might say Xi and Trump. And what does that mean for the markets? Well, it might not mean a lot. Last time it kicked off, the market crashed because it was a new thing. And then suddenly the market turned around and went to the moon. Well, anybody that saw that will realize that America has the financial manipulative power to stop the markets from crashing. But then when you look at gold and silver, you will see there are inflationary impacts from that kind of behavior. Now, if you look at it again from America's point of view, it's now got to go hell for leather for growth and re-industrialization. To do that, you're going to need to print money. You're going to need to print a lot of money. And that's going to be inflationary. Not necessarily runaway inflation, not necessarily hyperinflation, but certainly elevated inflation. Because when push comes to shove, America cannot have a conflict with China because it simply can't make the kit. It can't make enough tanks, fighter planes, rockets, ships. It just doesn't have the infrastructure anymore. And on top of that, it doesn't have the components. So there's a guy called Palmer Luckey who built the Facebook heads-up display, or rather, he wasn't at Facebook at the time, but Facebook bought it for billions. And he took that money and he's built a defense company called Anduril. And you can see he's a gamer. I come out of computer games and I look at what he's doing, and he's basically taking computer game ideas and turning it into drones that are actually out there and can actually fight a war. And he's saying, most American defense companies rely on a supply chain that comes out of China. And that is absolutely tactically and strategically disastrous. So in a conflict that starts up at trade, you've got to see that that's going to go downhill into warmer conflict territory. And America has to break the supply chain with China. If it's going to try to remain the number one superpower, it's going to try to keep China at bay. It can't be relying on China for all its military needs, because China quickly becomes a military foe. And that's not even without thinking about Taiwan, where all that marvelous electronics that America needs is made. And all its AI chips are made, for now anyway. So America's got to break that stranglehold. But actually right now, it's in a headlock with China, because China makes all those components. You can't make a light bulb in America without a Chinese input. And how long would it take to break that simple grip? 3 years? 5 years? That means there's a long, long journey for America, with a massive investment need behind that, to get to where it can actually start to think about keeping America as the number one superpower. Because it's not growing. Well, it's growing a bit, but China's growing faster. And China's got the people. And China is the workshop of the world. As they grow alongside each other, China's going to be the one, isn't it? And to stop that, America has got to shift up a gear. And it's got to be able to control its own supply chain. That supply chain has to be almost internal to America. Well, that changes everything. So there are two themes right now in investment: AI and the conflict at the moment in trade with China. And AI changes everything, and this conflict changes everything. Because before this conflict, you had a globalization idea where everybody works together for a win-win, and all the poor get rich and all the rich get richer, and everybody focuses on their core competencies. So if cheap labor is the thing that you have, then you do cheap labor things and you export those things at a lower price than the expensive labor people can do. And the expensive labor people do expensive labor things, like make very, very clever chips or make clever software. And you swap them, and the net result is beneficial to everybody. That's globalization. That's supply chains. And supply chains get incredibly complicated. Things get quite cheap. And you have a sort of slightly deflationary environment that we've seen over the last 20 or 30 years. And everybody gets rich. Well, now we got to a situation where the dominant power is worried about losing its position and is deglobalizing. It wants to do everything and basically freeze out the less successful countries and keep them in their place. That doesn't sound so good, does it, really? But that's in effect what is going on. Well, that's a pretty serious conflict. Now, hopefully, the following is the case. China has been operating strategically, and America is now operating tactically. So long-term, short-term. All China has to do is carry on behaving strategically to win this conflict, to become the dominant superpower. Or America's really got to get its game on and really do a great job and really catch up. And this is what it amounts to, catching up to China. And that would be great, because China would advance, America would advance, it would be good old-fashioned, capitalist competition, and that would be good for everybody. But of course, it's very easy for that to start to fall to pieces and actually get into, conflict of a much nastier kind. But let's just say that's an outcome. Global trade competition competition for manufacturing dominance, for economic dominance, that would be good. But if China went tactical, and these people have always got reasons to go tactical because that's what gets books written about you. You know, oh, he did this, he did that, he blew up this, he invaded there. You know, a great leader has 10 books written about him. An awful leader has 1,000 books. So there's always that legacy issue that can get everyone in trouble. And if China went tactical, it could do some pretty damaging things in the short term, really damaging. Imagine this. So Trump goes, we're going to put 100% tariff on your inputs. China came out and said, yeah, well, we see what you mean. Yes, we are out-competing you. We do have low-cost manufacturing, and you do really need to get yourself back again. So I'll tell you what we're going to do. We're going to put 100% tariff on our exports to you. So anything we make that you want, we're going to put 100% exit tax. It's the $10 thing you're going to import. You're going to make it $20. Well, we're going to make it $40 because when they export it, we're going to put a tariff to double the price that you're buying at, and then you're going to put 100% on it. Okay, and that will help you. You'll be able to have manufacturing now. That'll all be good for you. But of course, what would happen is there wouldn't be any light bulbs within 6 months. There wouldn't be any iPhones. There wouldn't be all these other things that China has a component in that America doesn't make anymore. And so that would be really pretty catastrophic. And they could do it. It's only something like 14% of their exports is to America, 15%. So 85% go elsewhere. Well, they could do that. But then all those critical components, suddenly America can get them. I mean, how many screws that go into things, how many nuts and bolts that go into things in America come from America? Probably none. So imagine America ran out of 10-inch nails, or the tiny little hooky thing that goes into the widget, or test tubes, or bits that go into LED light bulbs, etc., 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 etc. If they did something like that, that would be absolutely disastrous, and they could do it. But what I think will happen is they'll go, well, we'll go tit for tat. You do this, we'll do the same. Yeah? You want to break our grip on rare earths? Well, we'll tighten it. You want to put a tax on ships showing up in your ports? We'll do the same. Because, you know, we are the workshop of the world, and you ain't. And we're in the better position than you. So, okay, let's keep doing that. And then what would America do? America would have to go into economic overdrive. The government will have to invest vast sums in bringing on manufacturing in America. And that could be really good, but that's also quite inflationary. Now, the really negative thought, if I was Chinese, I would say, what we're going to do is going to bring America down to our level. We like our level. Yeah? They want to be us. Well, let's go. We can do that. We can bring America's wealth down to ours. Americans can work in factories like our people. Americans can work 6 days a week like our people. Americans can get paid $17,000 a year like our people. And we have the economic tools to do it. Hopefully, they don't take that route. Hopefully, their strategy will be to just grin and bear it, tit for tat, and then just wait for reality to do its job. And that's what I think will happen. So we'll have America, we'll have lots of headlines, and you'll get tit for tat from China. You'll get America going, right, we need to make Phillips screws. We need to make 10-inch nails. We're going to, pay companies to build all the bits and pieces that we need for manufacturing to be the base of our manufacturing system. And we're going to basically spend fortunes bringing back manufacturing to America. And they will do that. And it will be a long haul because it's going to take probably, in reality, if you think about it, to get to the point when all these factories are automated and all done by robots, that's 10 years. So a long 10-year haul, a long remanufacturing, onshoring wave in America, alongside a situation of elevated inflation of somewhere between 5 and 7%. So all your commodities are going to go ballistic. Gold and silver, platinum, palladium, all those continue to go ballistic. But things like machine tools. Who makes machine tools in America? Not many. It's all made in Germany. Ally, very good. China, obviously not going to be getting much of that. So America has to rebuild its machine tool manufacturing people. Well, they might be a good investment because they're going to get handouts, big time handouts, and government's going to be telling its people to buy American or else, and therefore those companies are going to do very, very well. So this reshaping is going to offer a huge amount of opportunities for investment in things that are lowly valued right now and are going to be highly valued going forward. So that's my take after thinking about it. If the people in power have got any sense, now that's a Hail Mary right there. But if they have any sense, there's going to be this chronic strategic face-off, which is going to have America reindustrializing, but spending vast amounts of money doing so and creating quite high inflation in the process for a very long time. And hopefully that is the worst of it. From an investor's point of view, by investing in the things that will make that happen, you'll be doing America a favor and yourself a favor. So off we go. Let's help America reindustrialize, build its economy, and go up a gear and, make everybody rich, which is what we're all here for. Anyway, thank you very much for watching. Please subscribe and like. I've been ranting for 20 minutes. I'm going to cut it down and take out all the ums and ahs. And I hope the video's not too long, but it's going to be a big week next week. And, well, it's going to be bumpy. Anyway, I hope you have a very profitable time out of it, because I'm sure gold and silver is not going to go down by much. And precious metals will do quite well. But we will see. If you're in crypto, it's going to be a pretty interesting week too. But anyway, please subscribe and like, and there'll be another rant coming along soon. And if you want to pop in at anewfn.com and say hello, and if you want to pop by X and say hello there at Clem Chambers, I'll be watching and listening and replying. So see you soon. Bye now. And meanwhile, I have a new kitten. Don't know what it's called yet, but that makes us up to, like, I don't know, 10, 11, 12 kittens. Oh, cats. No, don't escape. Don't escape. Come on, little one. So hello, everybody. I'm back with my next rant. So the last rant was about what happened last Friday when Trump made a few tweets and the market collapsed and Bitcoin tumbled and, the proverbial hit the fan. And I made a post where I said, didn't think it was going to be so bad for the markets. And then I went to talk about what the situation was. So we saw yesterday, which was Monday, that the markets bounced. So that's good. So it wasn't Armageddon. And now we're in an aftermath situation. So you can look at these things in a short-term way. And when I said, well, I didn't think it'd make much difference, that was a brave claim to make. I could have very easily been wrong, but I wasn't. And you could put that down to a bit of good fortune. But the big picture is where the money is to be made. So what's the big picture? Well, many of you will still be thinking of Armageddon, because gold is for war and gold is going straight up. And it's going up in a way which you look at that chart and it's quite scary, because gold is for war. And if gold is for war, gold is going up like that because we're heading in that direction, what looks like pretty fast. But anyway, we're in gold. If the worst comes to the worst, we're in gold. So there you are. It's nothing we can really do about that. But I think that that's not the end game here. what is the end game is the re-industrialization of America, because that's what the White House and that's what the state of America wants to do, because it realizes that to be the superpower of the good old days, it has to be the workshop of the world as well. It just can't be there cranking out Nvidia, cranking out Amazon and Google and Facebook. I mean, that part of the pyramid might be the tip of the pyramid, the high value stuff. But if you don't have the bottom of the pyramid, you are really risking disaster, because what you end up with is a house of cards. Now, that's a situation America finds itself in, because what's happened is it can't make ships, it can't make light bulbs, it doesn't make 10-inch nails. Now, I don't know whether it makes 10-inch nails or not, but you know what I mean.
Current reality, the U.S. can mass produce 10-inch nails, but doesn't do so at scale, despite a few surviving U.S. producers. The majority of mass market nails, including 10-inch spikes, come from China, Vietnam, Taiwan, and Malaysia.
Pretty much everything that is made, bought and sold in America has some element, some vital component that's made in China. Now, I was looking at some chemical processes today because I'm a little bit of a chemist these days. So I was looking at them, and all the chemicals in this particular process, the bulk of them come out of China. And it's just a general chemical process. But so much of the raw materials that go into that process, the reagents, come out of China. So if you wanted to do that chemical process, and China said, no, you can't have those chemicals, you're stuck. And it turns out that also a lot of the equipment in, say, a chemical process is only made in China because they make it cheaper and better and faster and deliver it quicker than anywhere else. So if you want a certain kind of test tube, there's only one place to go for it, and that's China. So if you want to do something in chemistry and China doesn't like you, you're going to find it real difficult. And then if you want to build the equipment anyway because you found someone in Germany to supply the chemicals, it's really difficult because all the test tubes and pipes and rubber bungs and all that chemical kit, it's only made in China, near enough. So when you look at the whole pyramid of the modern economic structure, China's everywhere. China is the workshop of the world. So that's scary, that's terrifying, that's really bad news. But it doesn't have to be. That's just how it is. It is, as the young people say, what it is. But for America, it means that they have to also be an alternate supplier, if only to themselves. They have to start building factories and start making stuff. That's what the White House says it's trying to do. But that's not a quick process. That's a long march. That's a 10-year process. If the politicians and their systems can keep sane, what we're left with is America having to re-industrialize. And they're all talking about that. And I don't know whether people are listening, but they're all talking about that. So I was thinking, hold on a minute. Americans are not going to go into factories and start sewing sneakers. They're not going to be doing that. Packing boxes, all that stuff. So they're going to be building factories. Who's going to be working in the factories? Well, it's not going to be Mexicans now, is it? Because they shut the borders. Maybe that was the Democrats' solution to who's going to be in the factories. Lots of people that come to live in America. Well, that's not happening anymore either, is it? So who's going to be in the factories? And the answer is, I don't know who's going to be in the factories. But the real answer is robots are going to be in the factories. And America is going to be relying on robots and automation to re-industrialize. And I think Besson actually said that. So they're actually saying that. Okay, so that is the sort of opportunity us investors need to be thinking about. So we've gone down the thought process, and it's going to be a lot in the future about industrial robotics. Well, you can look at Tesla, and he's making his robot, and the Chinese are making lots of robots. But what about the current people making industrial robots? I go, I need to buy shares in industrial robot companies. So I go, tappity, tappity, tap, get a list together. At the top is ABB, which is a Swiss company. They are one of the big, if not the big, but certainly up there in the top echelons of industrial robot manufacturers. Maybe I should buy shares. Oops, I better not. They just sold their industrial robot company. Guess who they sold it to? SoftBank in Japan. Mr. Son, who stood by Donald Trump only a few weeks ago saying, yes, sir, let's build AI together. I'm going to put however many billions you need into American AI. That guy just bought one of the big industrial robot companies for $5 billion. You can see where all these arrows are pointing. Conflict with Japan, re-industrialization, AI, robotics. Who makes machine tools? You've got to have machine tools if you're going to re-industrialize. Well, funny enough, China has a lot of them. Also, Japan has a lot of them. Also, Germany has a lot of those allies. There's another place to look for investments. Now, these ideas are not for today. It's not, well, when SoftBank buys an industrial robot company, it may be coming pretty quick. But it's not for today, it's for soon. So what investors have to do is stake out these companies. And these are America reindustrialization, AI, automation, China conflict ideas, all intersecting. You find out who are all those companies, and then you stake them out, and you watch their chart, and you wait for them suddenly to do something strange. That's when you get in. That's the sort of thing I'm going to be talking about going forward, because this complete change in the world order that we're seeing now is going to unlock vast opportunities for investors. It's going to mean that certain things that were highly valued yesterday might not be highly valued tomorrow. And certain things that are not highly valued today might be highly valued tomorrow. And that repricing is where we fit in. And on top of that, not only do we fit in there, not only is this a great opportunity to make a ton of money, we'll be helping our countries and the free world rebase itself, adapt, and prosper. So what could be better? That's what I've got to say today. Thank you very much for watching this video and for the last one, which has been my best video ever by a long mark. And I'm enjoying this process. So please interact, because I'm very happy to reply to comments and I read them all. And your input actually inspires me and certainly encourages me to do more. I look forward to hearing from you, and there'll be another one of these videos coming up in a couple of days. Goodbye now. So hello everybody, this is my new rant. The bottom line in markets is there's only one call you really have to make, and that is which way is the market going. Because if you're in a bull market and you're short, you're going to lose money. If you're in a bull market and you're long sensible stocks, you're going to make money. If you're in a bear market and you're long in sensible stocks, it's really hard to make money. If you're in a bear, well, you're going to lose. So you really can't fight the market direction. So you really should be asking yourself on and off, which way is the market going in general? If you're not asking that question, either one of two things is in your mind. One, it's just going up. I don't care. It's always going to go up. It's going to go up forever. And that's the buy and hold position. Buy, hold, buy the dip. It's always going to be going up. So it should always be long and, dollar cost average. And when it slumps, just buy more from your reserves and just sit there, buy, hold forever, and you'll be fine. And that has proven to be very correct over a very long period of time. Now, of course, the trend is your friend to the bend in the end, but, it's down to old pessimists to keep saying, it's going to crash, it's going to crash, it's going to crash. And of course, if you look back at the past and you had buy and hold, none of those crashes really added up to much. However, if you're watching this, you're probably not a buy and hold, buy the dip, go to sleep, come back in 20 years and find that you've got a lot of money sort of person. You're somebody that worries about the dips and doesn't want to be in at a crash and is watching the market heavily. The big question for you and for me is, which way is the market going? Are we going to crash? Now, in the past, I've been very, very fortunate to get out at the top before lots of past crashes. And sometimes I've got out
at a top that's almost been a crash and not been a crash. So probably out of about 4 crashes since 2000, there's been a couple of false alarms, but getting out at the top and in at the bottom has been very, very profitable for me. And you'll see recently with the tariff crash, I was out before it crashed, and I did kind of squeeze back in, not quite near at the bottom, but kind of there and abouts. But I didn't get back into the old stuff. I got back into different sets of equities when I did that. I pivoted out of normal stocks into precious metals and into defense stocks. And that wasn't such a great move to begin with. But now precious metals and defense stocks has caught up with a bounce in normal stocks. So that came through. But nonetheless, I'm always looking to make sure I'm not going to be in the market at a top before a crash. And missing those things, if you get in at the bottom, is very, very profitable. But let's not think about that right now. Let's think about the basics. Which way is the market going? Now, the bottom line for the market in the world really is the NASDAQ. That is the biggest market, most exciting market, the one that everybody follows, the one that has all the superstars in it. And the NASDAQ is the banner holder of the whole global stock market and of course the US market. That's where the FANGs live, the trillion-dollar companies live. That's where all the excitement is. So the question is not which way the market's going, but which way the NASDAQ's going. Let's have a look at the chart and discuss where it looks like it's going. So here is a medium-term chart. And it goes back to 2023. Most people would say that's a long-term chart, but I call it a medium-term chart. Now you see the trend is pretty clear. You've got that tariff crash and you've got that amazing return, which I believe to be engineered by the American government. And now you can see it's back on the short-term, medium-term trend. So you can see 2 trends there, and you can see where they cross, and they cross in the not too distant future. And then you would kind of expect the market to carry on along that trend. Now last year, before the tariff crash, I was saying that although the NASDAQ was high, it was in boom territory, but not bubble territory. And that it was going to go into a bubble, and that bubble would be, incredible or amazing, pretty dangerous, pretty lucrative, potentially disastrous. Because what happens when a boom goes into a bubble is people get overcommitted. And it goes up and it goes up, and they make huge amounts of money, and they get more and more confident, and they get more excited, and they get more ecstatic, and they get more committed, and then bang, down it goes, and they get wiped out. That's what happens in boom bubble crashes. And you can see that in Bitcoin only a few days ago, when a kind of second wave of the tariff crash occurred. And Bitcoin slumped from, I think, $124,000 a coin down to like 103 on certain platforms. And of course everybody stopped, got blown out, and billions were lost. And all those overconfident geniuses in Bitcoin who had made millions, a lot of them completely lost their shirts. That's what happens in bubble markets. The way to handle bubble markets, first of all, is to know that you're in a bubble. That is the first thing. If you know you're in a bubble and you don't confuse the bubble with your brains, then you can make a lot of money because you get out at some point. You don't think it's going to keep on going, and when it stops and starts to go down, you don't think it's going to recover, and you don't just sit there and get crushed. So here's a little commercial break. Now, as some of you will know, I've just started a website called New FN, and currently it offers UK real-time prices. So if you're a UK user and you're into the stock market and watching it live, it's the site for you. Very, very new. We're building all sorts of things. It's absolutely alpha test, so you can come on and use it and play with it and have some fun and help us develop it going forward. Now, for watchers of my videos that want to have a interaction with me, want to have a chat, want to post a message and get me to reply, that's the place to go, anewfn.com, because I'm on there all the time, and when I see a message, I'll reply to it. Now, with YouTube comments, there's just a mountain of them, and it's quite difficult to reply. A, for some reason, I can't thumb up people in the comments, and B, if I've got 200 or 300 people saying, that's great, thank you very much, da, 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 da. You know, I can't, it's very difficult for me to respond on the YouTube comment format. It's really not built for it. But if you actually want to have an interaction, you want to pick my brains, or you want to make a point, if you go to a new FN, there's a thread there, and I'm interacting with our user base, or will be, because it's only just went live like 2 hours ago. So if you want to chat, if you want to bat some ideas around, come to a new FN, post on my thread, and we'll, have an interaction. That is, and in addition to that, if you want to see what I'm doing and all the other sort of things, like talking on places like Kitco and David Lean and Liberty in Finance, if you go to Twitter and you follow me at Clem Chambers, I'm probably putting it there somewhere, you never know, then you can follow me and you'll see all the latest stuff I'm rabbiting on about. It comes out. So go over there and follow me and you'll get updates. Anyway, back to which way the market's going now. Oh, actually, I'm an influencer. I have to do this tonight. Now. So are we in a bubble? And if we are in a bubble, what happens next? Because this chart says bubble. Because bubbles go whoosh. And you can see one in gold right now. And when you're on that whoosh, you're in a bubble mode. If you're doing that, it's just the market. But when it goes vertical, parabolic, or whatever word you want to use, that's when you're in a bubble. So the question is, where is the top? Not, are we in a bubble or not? This market has gone from boom into bubble. Now, the trick is to spot where you think the top is going to be. So I won't comment on that, because I'll just be watching it and listening to the news and waiting for the sort of signals that say the top is in. And that's normally when everybody starts to say, Hosanna, it's awesome, it's going to go to 40,000, 50,000, 100,000, a million, billion, trillion. That is, for me anyway, the get ready to get out mode. But that's not here yet. It's not here for gold. It's probably here for Bitcoin. It's not yet here for the NASDAQ. There's ways to go. So these are the waves that we're going to be riding, and I'll be covering them all here. And I have skin in the game. So we're in NASDAQ bubble mode. We're in gold, precious metal bubble mode. Certainly for gold, certainly for silver. I don't think for platinum and palladium. We could be just at the very, very beginnings of a boom, and that would be followed by a bubble in US defense stocks. So it's very exciting times if you're an investor, very exciting times if you're a trader. And there's a lot of money to be made in these volatile times. Anyway, thanks so much for watching. Please subscribe and like and all that good stuff. I'll be back for another rant very soon. Bye now.